My dear students, welcome back to our channel. In this video, I will be explaining the Bcom second semester subject Financial Accounting as prescribed by Osmania University and other universities of Telangana. We will go through the important questions and answers one by one. Let's begin with a quick revision. Unit 4 first important short question is Single Entry System. Single entry system is a basic and incomplete method of accounting. In this system, only one side of each transaction is recorded, usually only cash and personal accounts are kept, while other details like purchases or sales may be missing. It is mostly used by small businesses or shopkeepers who don't have proper accounting knowledge or resources. Example: Ravi owns a small mobile repair shop. He writes down only the money he receives and pays, like rent, mobile parts, and customer payments, in a notebook. But he doesn't keep records of how many phones he repaired or how much stock he has. This is a single entry system. Easy to remember. Single entry is equal to simple and incomplete. It's easy and cheap, but not reliable for big businesses as it doesn't show full financial position. Next important short question is 2 features of single entry. The single entry system is a simple method of keeping accounts, mostly used by small shopkeepers or sole traders. It does not follow full accounting rules. Here are the main features. 1. Incomplete records. Only cash and personal accounts are recorded. Other accounts like sales, purchases, or expenses are not properly maintained. 2. No double entry. Unlike the double entry system, here only one side of a transaction is recorded. 3. No proper trial balance. We can't prepare a trial balance, so we can't check for errors easily. 4. Suitable for small businesses. It is cheap and simple, ideal for small kirana stores, tailors, or mobile shops. 5. Hard to find profit loss. Profit or loss is found by comparing opening and closing capital, not from a profit and loss account. Example: a vegetable vendor writing only money in and money out in a notebook follows the single entry system. Easy trick: single is equal to simple but not safe. Next important short question is 3. Explain limitations of single entry system. The single entry system is simple but has many limitations that make it risky for growing businesses. 1. Incomplete records. Only partial information is recorded. It doesn't give a full picture of the business. 2. No accuracy check. We can't prepare a trial balance, so we cannot check for mistakes or fraud easily. 3. No proper profit calculation. Profit is calculated roughly by comparing capital at the start and end. It's not exact. 4. No true financial position. We can't prepare a full balance sheet, so the business owner may not know the actual financial status. 5. Not accepted by banks. Banks and financial institutions do not trust this system for giving loans. Example: if a small cloth shop owner only writes cash entries, but doesn't note credit sales or stock, he may never know how much profit he truly earned. Easy tip: single entry is equal to simple but not reliable for big growth. Next, Unit 4. Long questions. First important long question is: what are the differences between single entry and double entry system? In financial accounting, there are 2 main systems to record business transactions: single entry system and double entry system. Let's understand the key differences. 1. Meaning. Single entry system Only one side of each transaction is recorded. Double entry system, both sides, debit and credit, are recorded. Example. In single entry, you write paid 500 rupees for rent. In double entry, you write rent ACDR 500 rupees to cash AC 500 rupees. 2 records maintained. Single entry keeps only cash book and personal accounts. Double entry maintains all types of accounts, real, personal, and nominal. 3. Accuracy. Single entry, no trial balance, so hard to detect errors. Double entry, trial balance helps in checking accuracy. 4. Profit calculation. Single entry, profit is found by comparing capital at the beginning and end. Double entry, profit is calculated through profit and loss account. 5. Suitability. Single entry, best for small businesses, like tea shops or mobile vendors. Double entry, suitable for all types of businesses, especially big companies. 6. Legal acceptance. Single entry, not accepted by law or banks for financial statements. Double entry, legally accepted, trusted by auditors and banks. Easy trick to remember. Single is equal to simple but incomplete. Double is equal to detailed and accurate. Summary table. Point: single entry, double entry. Sides recorded 1, 2, debit and credit. Records few, complete. Accuracy low, high. Profit calculation approximate, accurate. Suitability small shops, all businesses. Legal acceptance no, yes. Next important long question is to explain the method of conversion of single entry transactions into double entry method. Many small businesses use the single entry system, but it gives an incomplete picture of their financial position. To make it more accurate, we convert it into the double entry system. Let's understand the method step by step. Step 1. Prepare opening statement of affairs. It's like a balance sheet. List all assets, cash, stock, furniture, etc., and liabilities, loans, creditors, etc. to find opening capital. Formula. Capital is equal to assets, liabilities. Step 2. Collect all transactions. From the cash book or diary, collect information like cash received, cash paid, personal accounts, bank transactions, expenses and incomes. Step 3. Prepare cash book. Make a proper cash book with all receipts and payments during the year. Step 4. Record all transactions in journal format. Now write transactions in double entry format, both debit and credit sides. Example. Paid salary 5,000 rupees. Salary ACDR 5,000 rupees. To cash AC 5,000 rupees. Step 5. Prepare ledger accounts. Transfer entries from journal to ledger and balance them. Step 6. Prepare final accounts. Now you can make trading and profit and loss account to find profit or loss. Balance sheet to show financial position. Step 7. Find closing capital. Make a new statement of affairs at the end of the year. Closing capital is equal to assets, liabilities. Why convert to double entry? Gives accurate results. Helps in taking better decisions. Accepted by banks and auditors. Easy tip to remember. SCPJLF. Statement of affairs. Collect transactions. Prepare cash book. Journal entries. Ledger. Final accounts. Next important long question is 3. Ram keeps his books on single entry system. You're required to ascertain profit or loss made by him in the year 2018 from the following. Particulars 31st December 2017. Hours 31st December 2018. Rupees. Cash in hand 53,500, 54,000. Bank overdraft 45,000, 40,000. Stock in trade 60,000, 80,000. Sundry creditors 45,000, 35,000. Sundry debtors 60,000, 80,000. Bills receivable 42,000, 40,000. Land and building 1,80,000, 1,80,000. Furniture 46,000, 46,000. Drawings during the year amounted 12,000 rupees. Depreciation is to be calculated on land and building at 5% PA and furniture at 10% PA. Provide for doubtful debts at 5% on debtors. Question: ascertain profit or loss using statement of affairs, single entry system. We will use this formula. Closing capital, opening capital plus drawings, additional capital is equal to profit. Assume no additional capital introduced. Step 1. Calculate capital at the beginning, 31st December 2017. Assets amount, Rs. Cash in hand 53,500. Stock 60,000. Sundry debtors 60,000. Bills receivable 42,000. Land and building 1,80,000. Furniture 46,000. Total assets 4,41,500. Less creditors 45,000. Opening capital 3,96,500. Step 2. Calculate capital at the end, 31st December 2018. Remember to deduct depreciation and create provision. Depreciation. Land and building is equal to 1,80,000 by 5% is equal to 9,000. Furniture is equal to 46,000 by 10% is equal to 4,600. Provision for doubtful debts. Debtors is equal to 80,000 by 5% is equal to 4,000. Assets amount, Rs. Cash in hand 54,000. Stock 80,000. Sundry debtors 80,000 to 4,000, 76,000. Bills receivable 40,000. Land and building, after DUP, 1,71,000. Furniture, after DUP, 41,400. Total assets 4,62,400. Less, creditors 35,000. Closing capital 4,27,400. Step 3. Find profit. Formula. Profit is equal to closing capital, opening capital plus drawings. Is equal to 4,27,400 to 3,96,500 plus 12,000. Is equal to 42,900 rupee profit. Final answer. Ram earned a profit of 42,900 rupees during the year 2018. Next important long question is: 4. Ram keeps his books in single entry system. On 1st January 2014 his position was as follows: sundry creditors 20,000 rupees, cash in hand 300 rupees, cash at bank 10,500 rupees, sundry debtors 40,000 rupees, stock 10,000 rupees, plant 20,000 rupees. On 31st December 2014 the position was: sundry creditors 35,000 rupees, cash in hand 500 rupees, cash at bank 22,000 rupees, sundry debtors 49,000 rupees, stock 12,000 rupees, plant 45,000 rupees. Ram drew 500 rupees at the end of every month. He introduced 25,000 rupees by way of additional capital. Depreciation at 10% on plant and raise a reserve 2% against sundry debtors. You are required to prepare a statement of profit and loss and statement of affairs revised at the of year. Given question summary. Ram uses single entry system. We are given his assets and liabilities at the beginning and end of the year. We need to calculate 1. Statement of profit or loss. 2. Revised statement of affairs, closing balance sheet. Step 1. Opening statement of affairs, as on 1st January 2014. Assets amount Rs. Cash in hand 300. Cash at bank 10,500. Sundry debtors 40,000. Stock 10,000. Plant 20,000. Total assets 80,800. Less creditors 20,000. Opening capital 60,800. Step 2. Closing statement of affairs, as on 31st December 2014. Apply depreciation on plant at 10% and reserve for doubtful debts at 2%. Plant depreciation is equal to 45,000 by 10% is equal to 4,500. Value is equal to 40,500. Reserve on debtors is equal to 49,000 by 2% is equal to 980. Value is equal to 48,020. Assets amount Rs. Cash in hand 500. Cash at bank 22,000. Sundry debtors, net, 48,020. Stock 12,000. Plant, after due, 40,500. Total assets 1,23,020. Less, creditors 35,000. Closing capital 88,020. Step 3. Statement of profit or loss. Formula. Profit is equal to closing capital, opening capital plus drawings, additional capital. Drawings is equal to 500 month times 12 is equal to 6,000. Additional capital is equal to 25,000 rupees. Profit is equal to 88,020 to 60,800 plus 6,000 to 25,000. Profit is equal to 8,220 rupees. Final answer. Ram's profit for 2014 is equal to 8,220 rupees. You can now draw the final statement of affairs using revised values, closing balance sheet. Next important long question is 5. Mr. Malik has not kept proper books of accounts. The following information is given below. You are required to prepare a statement of profit and loss for the year ended 31st March 2022. Particulars as on 1st April 2021, as on 31st March 2022. Cash in hand 5,300 and 55,400. Bank overdraft 45,000 40,000. Stock 59,300 and 62,200. Sundry creditors 38,600 37,200. Sundry debtors 30,200 29,800. Bills receivable 42,400 40,800. Land and buildings 53,000 53,000. Furniture 4,600 4,600. Bills payable 62,000 58,000. Drawings during the year amounted to 6,000 rupees. Depreciation is to be calculated on land and buildings at 2% and furniture at 10%. Provide for doubtful debts at 2.5% on debtors. Goal: find profit or loss. Single entry system. We'll use this formula. Profit is equal to closing capital, opening capital plus drawings, additional capital. No additional capital is mentioned, so we assume 0. Step 1. Calculate opening capital. as on 1st April 2021. Assets rupees. Cash in hand 5,350. Stock 59,350. Sundry debtors 30,200. Bills receivable 42,400. Land and building 53,000. Furniture 4,600. Total assets 1,94,900. Less bank overdraft 45,000. Less sundry creditors 38,600. Less bills payable 62,000. Opening capital 49,300. Step 2. Calculate closing capital as on 31st March 2022. Apply depreciation and provisions first. Land and building depreciation is equal to 53,000 by 2% is equal to 1,060. Value is equal to 51,940. Furniture depreciation is equal to 4,600 by 10% is equal to 460. Value is equal to 4,140. Debtors provision is equal to 29,800 by 2.5% is equal to 745. Value is equal to 29,055. Assets rupees. Cash in hand 5,400. Stock 62,200. Sundry debtors, after reserve, 29,055. Bills receivable 40,800. Land and building, after DUP, 51,940. Furniture, after DUP, 4,140. Total assets 1,93,535. Less bank overdraft 40,000. Less sundry creditors 37,200. Less bills payable 58,000. Closing capital 58,335. Step 3. Calculate profit. Drawings during the year is equal to 6,000 rupees. Profit is equal to closing capital, opening capital plus drawings, is equal to 58,335 to 49,300 plus 6,000, is equal to 15,035 rupees profit. Final answer. Mr. Malik earned a profit of 15,035 rupees for the year ending 31st March 2022.